Donna, how you doing?
We're back.
We're back again. How long? It's been months now.
It's been a minute.
It's been months now. It's been a while.
Yes, the AI was the last one we did together.
AI was the last
AI
one.
was
That
the
was
last one.
that was months ago.
That was months ago. And how you been?
Good. I've been good. It's good to be back. It's good to be back with the new background. I realize this is the first webinar that I'm on, I believe, with the new background.
You know, we're getting bigger and better. Live events now at Madison Trust.
Yeah, we are. We are. Speaking of events, actually, you were just at Limitless with the team. How did that go?
We were, the Madison Trust team was in Dallas the last week of August, and funnily enough, we were breaking the taboo on UBIT and UDFI back in Dallas, and hence why today we will be
dispelling some myths.
It's such a hot topic, and I also feel like more than a hot topic, it's just, I feel like a lot of investors, clients, individuals always ask me questions on UBIT and UDFI, and there is this fear around these terminology. And honestly, I've even seen people back away from investments because they're afraid that they might incur UBIT. And I think it's very important, and there's very, very limited resources on this topic as well, especially in the self-directed IRA space. It's very important we have this conversation, and hence why I'm really happy we're doing this today, where we will be talking about what is UBIT, what is UDFI, triggers, benefits, opportunities, consequences, and strategies. How can we actually minimize the effects of UBIT and UDFI?
Yeah, absolutely. And I think the word that you use there that's key is fear. And really it's not something that people should be afraid of. Like you said, it does cause people to shy away from investment opportunities that could be potentially lucrative. But that being said, you know, today we almost want to kind of shift the paradigm of UBIT as this scary tax penalty saving thing to just another cost of doing business and investing.
So let's jump right in.
Let's jump right in.
So let's start with the basics. I think that's where it's very important for us to understand. There's two words we want to focus on. One, and I'm going to get this mixed up. I did the same thing at Dallas while I was presenting. So there is UBIT, Unrelated Business Income Tax, and then there's UBTI, Unrelated Business Taxable Income. So whenever you have UBTI, Unrelated Business Taxable Income, that is when you will incur UBIT, the Unrelated Business. Here we go. Income tax.
Yes, UBIT, Unrelated Business Income Tax, and that's really all that it is. It's a tax charge for running an active business out of a tax advantage entity, such as a retirement account like an IRA. That's it.
Exactly. The key term is active versus passive. If you are doing an unrelated active business from an entity that has tax exemptions like your IRA, then you have the potential to incur UBIT. I'm not saying, and this is something I always tell individuals, you can't guarantee something is going to incur UBIT. You have to take a look at the investment structure, the cash flows, consider is it active, whether it's passive, before you can come to that determination. And that's why financial professionals are very, very important. But yes, you're exactly right, Brianna. It really is that tax that gets placed because you're earning income from an active trade outside of the purpose of the entity you have set up.
Exactly. So we're going to transition on into, well, why was UBIT created?
Honestly, why was taxes created? Can you
say that?
Like, why was they? Let's just think.
Donna, we're not going into that right now. Oh my goodness. Sorry, ladies and gentlemen.
A lot of our attendees today would agree with me. Why was taxes created in general? But there's actually a really, really logical history behind why UBIT was created. The UBIT has been in existence since 1950. I believe Congress enacted UBIT in 1950 to ensure that certain tax-exempt entities, for instance, colleges, universities, a non-profit organization, had this tax-exempt status. So to ensure that they will not take advantage of their tax exempt status, get into active trades, which will give them an unfair playing field with, for-profit businesses, actually organizations that don't have this tax exempt status. That is the reason UBIT was originally created, so that these for nonprofit or tax exempt entities would not unfairly compete with companies that are for profit. And that is why when we think about UBIT, and I think understanding the history is very important, right?
Oh, of course.
If a lot of people understood why it was created, it would make sense. Why would an entity that is tax exempt have that unfair advantage versus when your LLC, commercial LLC, is going to get all these taxes on top of taxes on top of taxes, right? So very, very key part of understanding this UBIT, getting rid of this UBIT fear.
Yeah, absolutely. And I love what you said to level or even out the playing field between these tax exempt entities versus, these active businesses. I always love that. That helps me picture even the playing field between the two. So common activities that can trigger UBIT. So one of them that could is rental properties. Now I know that, rental properties among our clients is a pretty common asset type, and a good portion of rental properties are typically passive in nature. But there are certain instances where it could become active. It could be seen as that active business getting that active income, and therefore could potentially incur UBIT, like in the case of maybe doing multiple fix and flips.
Correct. So now let's start with the rental properties, but we will be talking a little bit more about this later during the presentation, where we bring on unrelated debt-financed income into play. That's really where how rental properties will incur UBIT, because you're right. So let's talk a little bit about what incomes that UBIT does not apply to, especially within your IRA, and that's important. Rental income, interest income, dividend from corporations, royalty income, capital gains. So anything, any profits, any income from passive investments will not incur UBIT. So here, why do we have rental properties? It's really when rental properties are financed with debt. Then you have that unrelated debt financed income that will incur UBIT, which we will discuss further in the presentation. And then you said fix and flip. Now, fix and flip, if it's a one-time, a few handful of times, wouldn't be considered active business. However, now imagine if you're doing 10, 15, 20 fix and flips in an IRA, right?
20 fix and flips. That just in general, that's a lot of work.
At that point for the IRA, the fix and flip is the business. It's generating active, active. It's generating active income from an active business, and hence why at that point you may incur that UBIT. Let's really define active businesses, and I love using this example. Now imagine, for instance, what coffee do you have a coffee shop by the corner of your house?
Oh, yeah. Have to have my coffee every morning. I mean, it's a must. I'm sure many of you agree.
Now imagine that your IRA is owning a coffee shop, right? Imagine the coffee shop. The coffee shop, you go in every single day. There are operating expenses. There's money coming in. People are buying coffee. There's a lot of pastries, a lot of transactions. There's things happening every single day. Money's coming in, money's going out. Now that is the definition of an active business. Now, if your IRA owns a coffee shop, your IRA has an active business. The purpose of an IRA tax exempt entity, especially self-directed IRAs, primarily for passive investments, which is, let me buy a vacation property. I'm planning on buying a vacation property in Cape May.
Lovely.
Put a vacation property. I'll take it out when I'm, nearing retirement. But for now, I'm going to rent it out, and then the rental income will come into my IRA. Now that's pure passive investment, right? But when it's active, that is not the purpose of an IRA to have active. You will incur that UBIT, especially if it's over the unrelated business taxable income is over $1,000. That is when you incur that UBIT tax.
Yes.
So if ever in doubt, ask yourself, is the investment I'm looking at active, or is it passive? Is money coming in and out all the time? And hence why the coffee shop example it always resonates with me, because I always think to myself, okay, this investment is not so active versus passive. And
for sure.
And a lot of times, very important. And if you have an LLC or a partnership within your IRA and they actively conduct businesses, now this is where the fix and flip comes in.
Yes.
We are actively doing fix and flips, and we're talking not 1, 2, 3, we're talking 10, 15, 20.
multiples.
Yeah.
Yeah.
Or managing a business. So if your
Mhm,
LLC is managing an active business, so imagine your LLC is managing the coffee shop.
Yeah.
That still can generate UBIT, and that will pass through to the IRA, because at the end of the day, it is the IRA's responsibility to pay UBIT. But again, once again, not everything incurs UBIT. So rental income, interest income, dividends, royalty income, capital gains does not incur UBIT. Hence why you don't see UBIT come often when it comes to self-directed IRAs.
Exactly. And I love that coffee shop example, because also I'm due for a pastry now or something at this point. It's making me hungry. Oh, actually, oh my gosh. Okay.
I was gonna say, I'm
Like, wait a minute. We actually kind of went through this.
that was the exact.
This is the exact example that we're talking about. It's the sale of, in this case, those goods from your coffee shop. So like Donna said, the coffee, the pastries, the cakes, I may have listed a little too much off there. But anyway, for those goods, that sale is considered active income, and your IRA in that case would occur to you.
Absolutely. And then some other points that I think we should also keep in mind is sometimes if you're investing in private equity, venture capital funds, hedge funds, and the underlying investment for these private equity deals, these private placements, these hedge funds is an active business, this may also pass through that UBIT to the IRA investor. So you have to be careful. And it's not often, but that is why due diligence is very important when you're reviewing an investment, and not just for the documents you have, but really looking at what are the investments, underlying investments within the fund? Where is the money that you're investing actually going to at the end of the day, the cash flows for the next few years and all that fun stuff? Because lesser known facts, right? We always assume it's just, oh, if I have a coffee shop, I'll incur UBIT. But then what if the fund owns the coffee shop, which I don't think the funds are owning coffee shops. They might be owning bigger businesses.
You never know. It could be the huge coffee business explodes from this.
And of course, I think the next few slides, we're going to talk about UDFI, which is very, very important too, because UDFI is a subset of UBIT.
Absolutely. But before we get there, I'd actually like to invite Alberto back on. We do have a poll break that we would love for you guys to fill out, and we definitely appreciate your participation. Alberto, should I unshare the screen while this is going on, or it should pop
No,
up
you can
first?
keep the screen going on.
Beautiful.
Great. So, like Brianna said, we'd love to discover more ways to engage with our clients. So we have a little poll for you guys to answer today, asking, do you guys listen to the radio or podcast? If so, what are some of your favorite shows or stations? And please type them into the poll on your screen. So that being said, Donna and Brianna, what are some of your guys' favorite podcasts?
I'm sitting next to the podcast queen, so I'm going to let her take it here.
Absolutely. So I will start with, two of my favorites, I'll say. So I do listen to the Personal Finance podcast, which actually is really great. It has a lot of good tips on investing and saving, and, just to hear that perspective and, sort of bite-sized knowledge is great. But one of the ones I listen to every morning, it's both podcast and radio, is Elvis Duran and the Morning Show. I've actually been listening to it since I'm 12 years old. It's a daily thing, so I love it so much. They're really entertainment news and very lighthearted. So one of the things I enjoy while either I'm working or going to the coffee shop that I enjoy to pick up some coffee. But yeah, those are my top two favorite. And like Alberto said, we would love more ways to engage with our clients. So any insights that you give here and fill out in this poll is so wonderful for us. So thank you. Yeah. So nothing you're.
I'm a reader. I'm a reader. That is my. I don't want to say problem, because reading is
Reading
amazing.
isn't a problem.
But
It's
yeah, I'm
amazing.
not a audio.
Yeah,
I'm
I
a
can
very
understand
visual
that.
person. So but I do like that you said personal finance. It's so important. And
Oh,
while
really
we are in the topic of this IRAs, UBIT, UDF, it all falls under personal finance.
It
and
really
it's
does,
so
yeah.
important that we're all educating ourselves on personal finance. I really
Absolutely.
wish more and more the younger crowd would get into that.
Yeah, it's so. Well, I mean, admittedly, before working here, I'd never even heard of a self-directed IRA. I knew vaguely what an IRA was, but I mean, just even working here has helped me learn the importance of personal finance and investing and really taking the reins on your financial future in that way for, a better retirement. I also too would love to have a vacation rental and,
Like, we all must strive for that.
and retire somewhere on a nice beach, with my coffee shop around. I know we keep coming back to that.
You really like the coffee shop, don't you?
That's an example because every time I talk about UBIT, I always think pizzeria. Now, I don't know if that's me being, part Italian, that I just go to that pizza example as a default, but same thing, you're
When I was prepping for the Dallas, the presentation, which was great because it was so interactive. At one point, I couldn't even
Yeah.
finish the presentation because we had so many questions from the crowd.
Wow.
So that's why I know for a fact this is such a good topic to talk about.
Mhm.
I had a coffee cup in my hand, hence why the example.
Wow, that's really where that
So
came
when
from.
I was prepping for the presentation, I was drinking coffee. I'm like, that's
That's a good example. Oh my gosh. We have some animated explainer videos on the website that go into this, and I'm pretty sure the example that we use
is
is
the pizzeria.
pizzeria. I wrote the script. That's how I explained it. I mean, I'm like, what active business? What am I thinking? Oh, people like pizza, so sure.
Yeah, and now people like coffee.
Yeah.
Yeah.
Is it two
It's
good
just-
examples?
It's so easy because of one of the questions that always come up is what is this considered an active income? Is active business? Is this considered a passive business? And also
Mhm.
very important to speak with your financial professionals.
Absolutely.
Because sometimes while the first underlying investment might not look, multiple investments procured after the fact for the fund could be active businesses. Also, staying on top of your investment strategies is very important when it comes to these topics of UBIT.
Absolutely.
Yeah. How are we doing with
Yeah,
the poll
yeah,
so
we
far?
do with the poll.
Polls looking good. Thank you everyone who's participating. So we are good to move on.
All right, fantastic. We'll transition to that next slide. UDFI, Unrelated Debt-Financed Income. Oh, I was going to toss the baton
okay, I was going to ask
to you, but
are you familiar with UDFI?
Yes. I mean, essentially, it occurs when an IRA is using leverage or borrowed funds to either purchase an asset or improve the asset. Any income acquired from that debt ratio would be subject to UDFI, which is a subset of UBIT.
Correct, exactly. And I think I believe that's our actually next slide where what's the relevance between UDFI and UBIT?
I'm jumping ahead. I'm so
No,
sorry.
that's perfect. That's perfect because we already know what UBIT is, right? It's the tax we get from unrelated business taxable income. So UDFI is an unrelated taxable income, except it's generated, like you said, because of the leverage associated with the assets. Now, side note here, I'm sure a lot of us are already aware when you are dealing with the loans associated with your self-directed IRA, they always must be non-recourse loans. You're not able to get conventional loans because with conventional loans, the guarantee, personal guarantees, your personal credit scores, and a lot of stuff that belongs to you personally is used in the vetting process, the underwriting process. When it comes to your IRA, the IRA account holder is considered disqualified to the IRA and its investments. Therefore, all loans associated with a self-directed IRA needs to be a non-recourse loans. That means it is between the IRA and the lender, and the only recourse or the collateral associated with the loan is the property, the security itself. Nothing to do with the IRA account holder's personal belongings, credit score, guarantee, any of that. So that's really where UDFI comes in, where UDFI, which is a subset of UBIT, is when you have a loan associated with that investment, whether it's real estate, whether it's something else, and any income generated from that portion of your asset funded by the loan creates UDFI. That income from that portion, it's UDFI, which then in turn incurs UBIT.
Yes. And we actually go into on the next slide a nice example here. Now, I'm not going to lie, I have trouble pronouncing this word. Acquisition indebtedness? Is
Yes,
that?
that's actually
Oh my gosh, I thought Oh my gosh, I thought I was gonna struggle through that one.
So this is a very, very important term because this plays a huge role in calculating UBIT. It's really the outstanding amount of debt used to acquire the property. So
Mhm.
the easiest way to understand this is, and we have the example here, consider you are buying a rental property. Now you're buying a beach house in Cape May.
Oh, all right, there we go.
It's $200,000, which by the way is lies. Nothing in New Jersey is bad.
Yeah, I was gonna for the example, we use these prices for the example of math. They may, not reflect the current market in
Yeah,
certain
the
areas.
current New Jersey
Right.
market is not
But
200,000.
yes, it may not be. Okay.
Definitely not. I'm not even gonna say may it's not.
All right.
For those of you from New Jersey, just so you know.
It was for the math. Yes. Okay. I am purchasing this vacation rental property. Super
From
excited.
your IRA.
From my IRA.
IRA.
For 200 grand.
Okay.
And I have 100 grand in my IRA that I'm going to use to purchase, this asset. And for the other 100 grand, I'm going to use non-recourse loan. These
Correct.
borrowed funds.
And definitely Madison Trust, we also have a lot of information and context we can provide if you're looking for a non-recourse lender associated with your IRA as well. So you are working with one of these non-recourse lenders, a
Yes, I
financial
am.
institution. You get approved for 100,000. So your 200,000 property now is owned 50% by your IRA and 50% leverage with a loan, correct?
Yes, that's correct.
You're renting it out. Great. You're getting $10,000 a month, which is actually realistic in the summer in New Jersey.
Yeah, no, I'm having a great season this summer, apparently.
And the $10,000, 5,000 from that $10,000 is not going to incur UBIT. Why? Because the property itself, the ownership, and that's what acquisition indebtedness means. 50% is equity fully from the IRA, right? And only
Yes.
50% is debt. So from the 10,000, 50% that belongs to was leveraged from the non-recourse loan will incur UBIT. So only $5,000 from that $10,000 rental income will incur UBIT. So you're not paying UBIT for the entire
thing.
Exactly. And that's the calculation that's very important, that debt ratio there.
Definitely.
Very, very important. And that is also why, if you're not sure, always having your tax advisor, your CPA, your financial professional taking a look at this to ensure that you are paying the right UBIT amount is important. And let me ask you this, when you're filing for UBIT taxes, what is the form you use?
990T.
And would the individual themselves pay the UBIT out of their own personal money or through the IRA?
Through your IRA. So
Amazing.
just like any expenses and income, this tax would also come from your IRA funds, not your personal funds.
Correct. And I was asked this question and I thought it was a very good question. Do you pay UBIT at the end of the cycle of your investment if it's a 5-year, 10-year investment? And I thought that was a really good question.
Yeah, very good question.
You pay UBIT the year you incur it. So if you are incurring UBIT for 2024, you will need to file for UBIT by the tax deadline of next year. Or if you need an extension, you can file for an extension, and then your UBIT taxes can also be extended for that. I think it goes to October 15th. Yeah.
Like 6 months or so.
Correct.
Is that math correct?
Yes. 6 months, perfect. So, but yeah, I thought that was a great question
It's a
because
really good
you
question.
don't really hold off on that. You really have to. And if that has ever come across, definitely speak with your CPA immediately.
Excellent. All right. So some strategies.
The reason why we are all here.
Yeah. Oh, yeah.
The reason why we are all here. Very important. And a lot of these strategies are strategies that I've seen a lot of our clients use, a lot of investors outside use. But if you are really worried about UBIT, and I always like to tell this to people, if you are incurring UBIT, you're doing something right, because that means you're actually earning profit.
Oh, yeah.
You're actually making money. And like you said earlier, it's just the cost of business, right?
It is.
But if you are so afraid of UBIT, you might want to then look into the structure of the investment and structure it in a way that it does avoid UBIT. And careful planning and structuring investments will absolutely help mitigate that UBIT liabilities. But this is where you take an active role in really taking a look at your investments come in. Your financial professionals take an active role when it comes to your investments. Another is different types of business structures. I spoke about pass-through entities before,
Mhm.
right? So LLCs, partnerships, they're all considered disregarded entities. That means you could have an IRA, you have checkbook control through an LLC or partnership, and just because you have an LLC or partnership and you get into an active business, your coffee shop through that, doesn't mean you're avoiding UBIT.
Mhm.
It's pass-through entities. So from the coffee shop, the active business, UBIT will be passed through to your IRA. So you want to be very careful of that when you're setting it up and not have that misunderstanding just because I have an LLC,
Mhm.
I'm avoiding UBIT. However, C corporations have a different tax structure, and and they're also famously called blocker corporations. But a common misconception, you're not totally avoiding taxes with C corporation.
Mhm.
They just have a different tax rate. So for UBIT, the tax rate, depending on, everyone's income level, can range between 10% to 37%, versus corporate tax rate is at a flat rate of 21%.
Mhm.
So if you are definitely getting into an active trade, what would you prefer, that 37% or that 21%? By having a C corporation, you're blocking that high UBIT tax rate. And in exchange, in exchange for a lesser tax rate. And
Mhm.
at the end of the day, yes, there are still some monetary, taxable income,
Mhm.
but at a lesser rate. And I think I would pick that 21 over that 37% any day.
Likely I would too.
um, and and some other creative, again, at Madison Trust, we are passive custodians. We don't provide any tax, legal, financial advice. So I will keep saying this until my face turns blue. You must speak with your financial professionals who are aware of your financial structure, your financial status, what your next 5-10 year plan is, right? But I have seen some people also do foreign corporation, because foreign corporations have far lower corporate rates.
Mm.
That being said, foreign corporations are very, very complex. So you need to ensure that the investment you're getting into is worth it
Mhm.
for you to set up foreign corporations. But that is where some of the financial professionals have guided them towards. It's not an easy setup, but if the investment is worth it, that's another avenue you can look at.
Yeah.
A lesser known avenue, really. And then, of course, for UDFI. So now we spoke of a few ways we can minimize UBIT, right? For active businesses.
Mhm.
For real estate, we can get creative. The easiest way with real estate is, of course, paying off your debt fast. Acquisition indebtedness, right?
Yeah.
Lowering that percentage so you're not paying that UBIT. Another fun area I have seen is where people will set up an LLC.
Mhm.
They'll purchase the real estate with the debt through the LLC, but then at the end, when they're ready to sell, they sell the LLC versus the real estate.
Wow.
Correct.
Wow. Definitely a creative solution. I have never heard of that one
Again,
before.
things I have seen in the
Yeah.
industry.
Interesting.
And LLC falls under capital gains, passive income, voila, we can rinse and repeat. So, voila. So there is, again, the reason we are talking about these strategies that we have seen happen is there are ways to minimize UBIT and UDFI, and it's important to know that so that we don't make the mistake of letting go of an investment because of the fear of UBIT, which unfortunately I have seen that too with investors, where
Mhm.
they missed out on fantastic investment opportunities because of UBIT.
Yeah.
And the UBIT, whatever you would have paid for the UBIT would have been far less than what you would have made at the end of the day.
Yeah, that's true. Your potential gains could overshadow what you would have owed in the UBIT tax anyway. And like you said, you could be missing out on that lucrative opportunity. So, here are just some ways to potentially minimize UBIT.
Yeah, and if you are absolutely, and I know some, when it comes to investing, either you're aggressive, you're conservative, or you're
Mhm.
neutral, right? And if you are conservative with it, when it comes to your investing, that's completely okay, because you want to
Oh,
do
yeah.
something that you're comfortable with. You don't want to get into investments that's causing you high blood pressure, because that's not
No.
what you're comfortable with.
No.
You want to do something that helps you sleep at night, and if that's the case, and UBIT is not something you want to get into because it sounds complicated, you
Mhm.
don't want to figure out 990 T's, you don't want to figure out how much you owe, then really focus on passive investments, focus on passive real estate, focus on REITs, focus on things that will not have an underlying active trade, wouldn't have UDFI associated with it. And we have so much. We see real
Oh my
estate all the
gosh,
time,
yeah.
precious metals, cryptocurrency. We see so much of this. We see private equity, crowdfunding, startups. There's so much things you can do with a self-directed IRA that will not incur UBIT. So keep that in mind. And of course, the final strategy that I would like to leave everyone with is outside of a self-directed IRA, solo 401ks. So when you are leveraging real estate through a solo 401k, UDFI actually doesn't apply.
Wow.
So something absolutely to consider. And of course, if you are interested in solo 401ks, our sister company, Broad Financial, you can definitely give them a call and they can walk you through, educate you on solo 401ks. And if a solo 401k is a better fit for you versus a self-directed IRA.
Amazing. You heard it here. Ooh, sorry, I totally almost went past that slide, but probably one of the most important slides today. Don't be afraid of UBIT. I love this first quote here. UBIT should be viewed as a consideration, or like we said, an expense of doing business, not a deterrent. There's so many opportunities out there that, Donna, I know you've seen that people pass up on, and there could be so much potential and, so much gains, and just also the ability to further diversify your portfolio. So, it's very important that, you're not afraid, you're aware of what it is, and you don't pass up on those opportunities.
Absolutely. And costs, expenses incurred in investments is just a part of that investment journey. Nothing, what is the famous saying? There is no such thing as a free breakfast, right? Have you ever heard that before?
I've never heard.
There is no such thing as a free breakfast.
I guess it's very true.
I think that's something I heard in my economics class back in
Wow.
the day, but that is so true. To make money, there are going to be costs, and UBIT is one of those costs. And not often, not frequently. We have about $4.8 billion worth of alternative investments under our portfolio, and UBIT is not something we see every single day. So, like Brianna, you said, don't be afraid of UBIT. Educate yourself before you make that decision to avoid an investment because of the fact you may incur UBIT. So I really hope that this presentation was helpful, and then we can absolutely, this presentation brings to the end of a huge saga. I know Madison Trust, our manager of investor education, has been helping us create a lot of resources regarding UBIT and UDFI. I have a few articles on LinkedIn regarding UBIT.
You do.
So this will bring together end of a nice saga where we educated a lot of people on UBIT and UDFI.